The right types of investments for a 60-year-old's retirement portfolio. A well-structured retirement portfolio is essential for financial security in the later stages of life. At 60, investment choices should balance growth potential with risk management, ensuring a steady income while safeguarding capital. Get free Gold IRA guide and learn about how to secure your retirement with gold investment. Click the link below in the description to get it. Here are various investment options suited for a retiree's portfolio, each with distinct advantages and drawbacks. 1. Stocks for 60-year-olds. Pros of stocks: growth potential. Equities have historically outperformed most asset classes over the long term. Dividend income: many blue-chip stocks provide regular dividends, offering a passive income stream. Inflation hedge: stocks tend to appreciate over time, preserving purchasing power. Cons of stocks: market volatility. Prices fluctuate unpredictably, posing risks to retirees who need stability. Capital losses: a market downturn can erode investment value, particularly for those nearing retirement. Emotional stress: managing a stock-heavy portfolio requires active oversight, which may not suit all retirees. 2. Bonds and fixed income investments. For retirees, bonds and fixed income instruments serve as financial anchors, providing stability and predictable returns. Types of bonds: government bonds. U.S. Treasury bonds are ultra-secure and offer guaranteed returns. Municipal bonds: tax-free income for those in higher tax brackets. Corporate bonds: higher yields but carry default risks depending on the issuer's credit rating. Pros of bonds: lower risk, less volatile compared to stocks. Reliable income: regular interest payments offer financial predictability. Diversification: helps counterbalance stock market fluctuations. Cons of bonds: inflation risk, fixed returns may lose value over time. Lower yields, returns may not match stock market gains. 3. Real estate investment options. Real estate remains a cornerstone of a diversified retirement portfolio. It provides tangible assets, passive income, and long-term appreciation potential. Types of real estate investments: rental properties, steady cash flow from tenants. Real estate investment trusts, REITs, a liquid, hassle-free way to invest in real estate. Vacation rentals, high rental yields in tourist-friendly locations. Pros of real estate investments: income generation, monthly rental income can supplement retirement savings. Appreciation potential, property values generally rise over time. Tax benefits, deductions for mortgage interest, depreciation, and property expenses. Cons of real estate investments: management hassles, rental properties require ongoing maintenance and tenant management. Liquidity concerns, selling a property can take time. Market risk, housing market fluctuations impact property values. 4. Mutual funds and ETFs. Mutual funds and exchange-traded funds, ETFs, provide diversification without requiring hands-on portfolio management. Pros of mutual funds and ETFs: diversification, exposure to multiple asset classes reduces risk. Professional management, expert fund managers oversee investments. Liquidity, easily bought and sold on the market. Cons of mutual funds and ETFs: expense ratios, management fees can reduce overall returns. Market-linked volatility, subject to fluctuations like individual stocks. 5. Gold and precious metals. For a secure portfolio, precious metals serve as a hedge against inflation, economic downturns, and currency devaluation. Pros of gold and precious metals: wealth preservation, gold retains value over time. Crisis hedge, tends to perform well during market instability. Portfolio diversification, balances risk in stock-heavy portfolios. Cons of gold and precious metals: lack of passive income. Unlike stocks or real estate, gold does not generate dividends or rental income. Price fluctuations, short-term volatility can impact returns. 6. Gold IRA, a strategic hedge for retirement. A gold IRA, individual retirement account, allows retirees to invest in physical gold while enjoying tax advantages. Benefits of a gold IRA: tax deferral, gains are not taxed until withdrawal. Inflation protection. Gold serves as a safeguard against the declining value of fiat currency. Wealth security. A tangible asset unaffected by market crashes. Considerations of a gold IRA. Storage costs, requires secure vaulting. Regulatory compliance, must adhere to IRS guidelines for eligible gold investments. A well-rounded retirement portfolio should blend growth, income, and security. While stocks provide appreciation potential, bonds offer stability. Real estate and mutual funds enhance diversification, while gold safeguards wealth. For those prioritizing long-term security, a gold IRA can be a prudent addition. Striking the right balance between risk and return ensures financial comfort throughout retirement. Free Gold IRA Guide. Learn about how to secure your retirement with gold investment. Download your free Gold IRA Guide now. Click the link below in the description to get it. Thanks for watching. Please like, share and subscribe.